Hi everybody, Andrew Thake here, mortgage agent with Dominion Lending Centers, and today I'm talking about some important points to consider when looking at porting your mortgage. Porting a mortgage can be a great option when moving to a new house and wanting to avoid a penalty from canceling your current mortgage. Now, I am able to assist with ports and love helping clients through the process, as there are a lot of important points to know when porting a mortgage, which I'll be able to go over with you to make sure there's no challenges or hiccups. Here are some important factors and possible challenges to consider when porting a mortgage. Qualifying. Porting a mortgage and applying for a new mortgage are looked at the same. If a client wants to port their mortgage, a new application and credit check is typically completed, and one needs to qualify for this new ported mortgage. For those changing homes due to marital breakdown, loss of job, reduction in income, credit problems, and so on, may face challenges when applying to port the mortgage. Probationary periods. If you're moving to a new location for your employment and your new employment has a probationary period, this could be a challenge, as this period needs to be completed before you'll be able to qualify to port the mortgage. Timing. If you're looking to buy a house before selling your existing property, if your current home does not sell in time before closing on the next home, then this can cause challenges with porting. The application would then change from a port to applying for a whole new mortgage while still carrying your existing mortgage, which may have a factor on your debt servicing ratios. Plus, if you need the funds from the sale of your property for the down payment on the next home, they may not be available if your existing place does not sell in time. The new property. The new property that you'll be looking at needs to be approved by the lender, and some properties may not be acceptable. For example, if you're moving to a condo where the square footage is below their minimum requirements. Needing more funds. If looking to port and increase your mortgage, many lenders will blend your old mortgage and rate with the new funds at current rates. Other lenders may add the new funds in a separate mortgage with its own term and rate, which can be confusing for some when having two mortgages, two payments, two renewal dates, and so on. Needing less funds. If looking to port the mortgage and decrease the size, such as when downsizing, it's important to note that a penalty may be charged on the amount of the reduction. Down payment. Even with porting a mortgage, it's important to note that a down payment is still required on the new property. Lastly, mortgage insurance. It's very important that if you have a currently insured mortgage, such as through CMHC, that you ask that the mortgage insurer premium be ported to the new property as well, as sometimes this is not done automatically and a client may end up paying the premium all over again. So as you can see, there's quite a few points to consider when looking to port your mortgage and some potential challenges that could arise. So if you're thinking about porting your mortgage, I invite you to give me a call anytime for more information, and I'll talk to you soon.